Hello, I want to thank you guys for tuning in to another episode of Finance Friday. This is your host, Andre Rivers, and today we're going to have a very special episode. I know a lot of you guys have been inquiring with me in regards to trading, and today we're going to talk about some intraday and some swing trading strategies and tips for beginners. So all of this stuff is basically stuff people pay hundreds of dollars for, but I'm going to give it to you guys. Just a little sample of what type of stuff you should look for within trades and how to basically prepare trades. Because a lot of people, you don't want to go into just throwing your money around in the trading arena as if it's gambling. You want to basically be able to be prepared, because although trading is risky, if you are prepared and if you have a plan, you can also gauge like your ROI and your risk to reward, and if stuff is worth trading or if trades are worth taking. And that's basically the strategy that I've learned that's basically beneficial to my success, has been picking and choosing my trades, not over trading, and basically finding trades that make sense, finding targets and getting in at those targets and getting out at those targets. So step number one, I want to let you guys know, is to review the tape. And review the tape, that's going to be technical analysis. That's going to be you basically reviewing charts and seeing the past. What I'm currently on is the hourly chart. You basically want to start from the furthest out. This right here is the Bitcoin USD chart. So it's kind of Bitcoin USD but let's go. You want to start furthest out, then go inch in, and basically to find trades. I do a lot of intraday, so my biggest indicators that I use usually are the daily, the weekly, the 4 hour, the 1 hour, the 30-minute, the 15-minute, the 5-minute, and the 1 minute. And I use those to basically pick different points and different timestamps to get in and out of trades. So let's look at the daily. And you see, this is just some previous stuff I've already been doing. This is a range that we're currently in. So I'm just going to pick some examples to basically find points of entries and points of basically exits. So you can see, as in, let me zoom in a little bit more. Let's actually go to the hourly. I'm going to do an intraday because I've seen some good stuff on the hourly. Now, you see I have this range, this range that I created. I'm doing the TA class. I'll basically be able to explain to you guys how to create these ranges and stuff like that, but that's not going to be in this thing. So just take a look at this chart currently, and you see I have a support here. So imagine if you're in this trade, or imagine if I'm in this trade in the hourly and this happens and it goes back. So this is what I mean as far as reviewing the tape. If we're in this time frame and I want to get into a trade, I'm looking at the previous thing to see what happened previously, or to see what happened before that, and I can see that it keeps bouncing off of the support, keep bouncing off of the support. So either it's going to hit this and go through this and I have a trade for a short here, or it's going to bounce off the support and go up and I have a trade for a long. So either or, you know, in this sequence you have a trade, and that's just from reviewing the tape. Reviewing the tape, maybe it would have made me not want to get in here. It's kind of risky here, it's kind of risky here, it's kind of risky here, it's kind of risky here. But once it hits that support again, you know it's either going to break the support or it's going to bounce off the support. It's only a 50-50 chance. Whereas here, it can go sideways, it can go up, it can go down, it can go, it's too many different options. You want 50-50 chances for trades. And you want it to be basically based off of probability. So I knew that oftentimes once it hits the supports, it bounced off the support, it bounced off the support. So I see that it's going towards support again. 70%, you know, this will be like 70% chance that it's going to bounce, and the 30% chance it's going to break. And seeing as though it bounced off the previous two, I'm going to assume that the higher probability would be for the bounce off of it, which it did. So reviewing the tape, that's going to be the main thing to do to be able to pick trades. You always want to look left, look left, look left, look left, see what happened in the past to basically be able to predict what's going to happen in the future. And step 2 is going to be finding a target and a stop. So the target is going to be your entry point and your exit point, and your stop is going to be how much basically you want to lose. And you really can't really pick your stop loss until you know how big your position size is going to be, and that would be technically number 3, but let's stay with number 2. You want to pick your target, so pick your entries and pick your exit. And so let's go back to the previous example when we bounced off that support. So say I wanted to enter here. I'm going to zoom in a little bit. Say I predicted, believe that it was going to bounce, which it did. So it's just picking your entry point. So this right here is 62.17. It's 62.17, and then again, it's like I said previously, you want to review the tape. So you want to look back and see what was previous supports and what were the previous resistance. And I seen the last time we bounced up here, we stopped out at 67.90. So that would have been my target again this time. 67.90, or at least the top of this, which would be 62.20 from 61.97. So once we broke that 62.20, then you know that we're going to see the highest support. The highest resistance, which was 66.02. So once we broke that 62.20, you see we pumped all the way up, and we actually went higher. But the ideal thing would be to take profit here, since you know that this is where it rejected last time, and then you'll probably just try to get into a new trade or add in the trade. Or the best thing would do to be is once you get to these levels, put a stop in this area so that if it does retrace, you're stopped out in profit. And 3, choosing the position size. This is 2 and 3 basically intertwined, because you're not going to be able to really know your stops until you know your ROI, or like your risk versus your reward. So you can't really place stops until you know how much you want to risk, and that's going to basically be able to create your position size. And your position size is basically just how much money you want to put into the trade, and how many contracts you want to basically buy for either for options, for futures. So you want to choose a position size. Say you say let's go to the previous point we were already discussing. Say I want to jump back in here, and I jumped in at 62.10. So I would say it's at 62.10. I know that the last time we broke, what is this, 61.92, there's a lot of demand, 61.92. So if you're jumping in at 62.01, 61.92 would be a good stop, because you know if it breaks below 61.92, it's more than likely going to break that support. So, and like I mentioned previously, the target would have been up there, because that's the last time we got rejected. So that's how you basically be able to choose your stops, and depending on your position size is how much money you would lose when you get stopped out. And being stopped out is basically having a stop loss. So once it goes to a certain price where you didn't predict it to go, they'll close your position at that price so that you won't lose more money than you planned. So you basically choose your risk and reward based on your position size, and you choose your position size based off of the likelihood for your trade to succeed. I know with me, I personally like to go in with like more 50-50 trades, like the trade I previously discussed with you guys, this bouncing off the support. I know that since this already happened, and I'm more so thinking it's going to bounce again, since it bounced off of it 3 times already, I'm going to put probably 50% of my position here, and then probably add on as it goes up. But usually I'll put like 20% of my position when I'm not sure. If it's 50-50, I'll put like 20% of my position if I'm not sure. And then once I get confirmation, if I get 2 confirmations, 3 confirmations based on like indicators, or based on it just hitting that direction that I predicted on, I'll add on to my position. So I'll keep buying while it goes up before it hits my target, so that I'll have that position that I wanted by the time it hits my target. So, and 4 is going to be to take profit and to use stop losses. And I appreciate you guys previously in regards to stop losses, but that's also in regards to taking profit. So a lot of things I like to do within my trades is I add the 50% initially and then keep adding more and more and more into my position as it goes up. Say it gets here at 63.44, but my target is 66.61, and I'm currently at 63.48, 63.44. Say I put 500 more contracts at this point, and once it bounces here, I might close half of my position, take profit, and then ride out with the other half, and then just see where that takes me while I put stops in under. Every time it goes up, I'll put a stop in. So if it goes to here, I'll put a stop here. If it kept going up and it went to here, I'll put a stop here. If it kept going up and it went all the way up here, I'll put a stop right here while it's still in there, so that if any time that it cuts back, it'll just take me out of the trade and I won't lose any money at all. Because sometimes I wait too long for stuff to hit my target, and I get lost in trades, and the next thing you know, life leads to life and you can't monitor what's going on, and next thing you know, you're down a certain amount hoping that it goes back up, when in fact you were in profit for so long hoping that it goes higher. You should take profit at that point, so that if you do lose the trade, ultimately you did not lose any money. You actually either profited money or you didn't lose money. So that's going to be the main thing. You want to basically pick the slots to choose your stop losses and to where you can take profit, and I do both basically. I take profit by using stops, so I'll sell certain contracts at certain price points, so that if it does, the price goes down there, they'll sell some of the contracts and it goes back up, come back down, sell some more contracts. I'll just take profit that way. But some people like to have certain points, like I'm taking profit at this price, I'm taking profit at this price, I'm taking profit at that price. But me trading crypto and it being volatile and you never really knowing for sure what's going on, I like to take profit by putting close stops. Please, step number 5, I would say, is basically over trading. Try to limit over trading. And me, when I first got into trading, and even more so recently, I think until like the last couple of months, I haven't been over trading as much, but that's one of my biggest downfalls, is over trading. And I feel like for new traders, that is one of the biggest things that we're going to struggle with. And the remedy I found to help me overtrade is all of these things that I previously just discussed, and that's having a strategy, having a plan. If you have a plan every time you trade, you can't overtrade, because you'll have to create a plan before you trade, or you'll have to create points that this trade has to meet before you go in with the trade. But if you don't have that, you'll just overtrade. You'll jump into trades fast. I used to not even look at the market. I used to be looking at like the 5-minute chart, just jump into a trade just because I'm thinking, I'm gonna miss this, and I know the last time that I seen this happen, and then totally the opposite happens and I lose the trade just from not looking at the tape, not setting targets, not setting an exit, all of that type of stuff. So if you do all of that stuff, it's going to be very difficult to overtrade, because even if you're overtrading, all of your trades are going to be analyzed trades. They're not just going to be random trades. So I would say like that's the 5 steps for swing trading and day trading for beginners that you guys can utilize today to help you guys. I want to do a technical analysis class. I know you guys are probably looking at my screen like, what is all that other weird stuff? And we're going to talk about some indicators you can use to basically trade, and some of the things that I use and some of the strategies that I use, and to help you guys out. And if you guys have any questions, you guys can contact us at riflecorp@gmail.com, www.riflecorp.com. I'm your host, Andre Rivers. I want to thank you guys for taking time out and viewing this video. Hope you guys stay safe, stay corona free, and good luck with trading and good luck in the markets during this downturn, during this recession.